So look, Kolanovic, right? He's been known as the man Marco has been known as the man who can move markets. And basically, something that he's been seeing in the markets the past couple of years has really bothered him, which is what happens when trading declines and liquidity falls away, right? You have these sharp flash crashes. So he's basically predicting that when when the recession occurs, you're going to have these flash crashes. But instead of the markets coming back really quickly, you're going to basically have sustained and more severe flash crashes, which is a concern, I would think.
What causes these liquidity shocks?
Right. So he basically points to a couple of different, culprits, and they're all basically in the realm of what's changed in the market structure, right? So what's changed? So you've had, trillions of dollars, approximately $2 trillion, move into passive from active, right? So he's saying a lot of money is drained from value investors who can deploy money opportunistically to snap up shares. Electronic trading desks, right? So you've had human traders be basically replaced, essentially by algorithms, and these algos, they don't look at value. They basically only care about if markets going away, they're going to step back and bring in their bids. So liquidity tends to vanish in times of stress.
This is the market structure now. There's nothing that can be done about this.
Yeah.
And that seems more concerning, to an investor, I would think.
And his major point is that these markets have not been tested yet. You've had flash crashes that happened in the backdrop of a huge economic boom, right? A really steady economic growth. So what happens when these algorithmic markets encounter, something that's less ideal?
The thing that really got my attention was that he says this was less a prediction than a warning.
Yeah, I mean, basically, look, and JP Morgan, to be clear, they're not bearish on these markets today. JP Morgan says S&P is going to be at 3,000 by year end. And Marco in particular thinks that, the risks start to rise really at the start of the second half of next year. So to be clear, they're not calling for like doom and gloom right now. He's just saying, cycles always end. And when they do, there are things to be concerned about.